Being realistic in appraising your own talents and shortcomings, I think. I don't know whether that's innate, but some people seem a whole lot better than it, the others.
As inflation increases and financial stability becomes more uncertain, it becomes imperative to invest intelligently. In this video, you will discover the top 6 recommendations of Warren Buffett, a billionaire and successful investor, that are keys that can unlock the door to attaining financial freedom before 2024. Warren Buffett, the legendary wizard of Wall Street, has carved out an extraordinary empire based on timeless principles and an unyielding belief in his investment philosophy. You see, Buffett prowls the market, seeking undervalued assets neglected or overlooked by others. By embracing this contrarian approach, he dances on the fine line between risk and reward, positioning himself for unparalleled gains in the future. It's a daring dance, a ballet of betwixt and between, where fortune favors the bold. How often have you been seduced by complex financial instruments, only to be bewildered and burned? Buffett's message resonates loud and clear. Stay within your circle of competence. In a society rife with impatience and instant gratification, Buffett is a beacon of patience and resilience.
But competency is a relative concept. And what a lot of us need, including the one speaking, is what I needed to get ahead was to compete against idiots.
While others chase fleeting gains, Buffett anchors himself in the long game. Buffett diligently invests in companies and nurtures them over time, just like a gardener taking care of his fruits. Buffett leaves no stone unturned, diving deep into the labyrinth of financial statements, dissecting industry trends, and deciphering the codes of the competition. Here are the 6 investments he recommends. Number 1. Blue chip stocks. Blue chip stocks represent the pinnacle of stability. These titans of the stock market have weathered every storm that came their way, emerging as beacons of reliability. Blue chip stocks stand tall when others falter, attracting investors seeking a more conservative yet advantageous investment avenue. Profitability is the name of the game. These established firms have mastered the art of consistently reaping profits. Their business models are rock solid, and their brands command unparalleled recognition. It's no wonder that revenue flows like a mighty river, paving the way for impressive profit margins and inspiring dreams of long-term growth. But how can you assess a blue-chip company? Determining blue-chip companies involves considering various factors. Firstly, look at their financial performance. These companies usually exhibit consistent revenue, profit growth, and high profitability ratios like return on equity and assets. Another characteristic is their market capitalization. Blue-chip companies have significant market capitalizations, indicating their size and stability. They are often among the largest companies in their respective industries. Additionally, blue-chip firms are known for their dividend payments. They have a track record of distributing regular dividends to stockholders, even during economic downturns. This consistency in dividend sprouting or stable payouts highlights their reliability in generating investor returns. Apple Inc., Microsoft Corporation, and Johnson & Johnson are widely recognized blue-chip companies. Others include Berkshire Hathaway Inc., Visa Inc., and Procter & Gamble. The Coca-Cola Company, ExxonMobil Corporation, Walmart Inc., and JP Morgan Chase & Company also fall into this category. By staking in blue-chip stocks, you align yourself with companies adorned in the glimmering robes of customer trust and excellence. On to the second investment you should make: real estate investment trusts, or commonly referred to as REITs. REITs are like the VIP ticket to the world of real estate investment. Imagine investing in real estate without the hassle of becoming a property owner or dealing with the complexities of managing properties. That's where REITs come in. These specialized companies own, operate, or finance income-generating residential, commercial, or industrial properties. While stocks and bonds may fluctuate under inflationary pressure, REITs anchor their value in physical properties. As the value of underlying properties rises due to inflation and market dynamics, REITs' net asset value, NAV, naturally follows suit. It's like capturing that elusive double jackpot. When the time is right, selling your REIT shares can reap impressive capital gains. By investing in REITs, you gain access to various real estate segments, from residential and retail to industrial and office spaces. This broad exposure shields you from being at the mercy of a single market or sector. Inflation can strike unevenly, but with REITs diversifying your investments, you're upping your chances of staying profitable even when certain sectors or regions experience price volatility. Plus, REITs are legally bound to share a substantial portion of their profits with investors through regular dividends. With rental income forming a major REIT revenue stream, you can count on uninterrupted cash flow. Even better, these income streams often come with an inflation-adjusted twist. As prices rise, so do the dividends. That's right. Your income has the potential to grow alongside inflation, keeping you ahead of the curve. To start investing in REITs, choose a reputable brokerage account with research tools and low fees. Research and analyze REITs for strong property portfolios, reliable management, and financial stability. Examples of popular platforms include Fidelity, Charles Schwab, and TD Ameritrade.
Let's talk about Fidelity now. How big is it? How much money do you manage at Fidelity?
So we have almost $6 trillion under administration. So that includes money that we manage and money that we record keep that other people manage. We manage over $2 trillion, about $2.5 trillion in equities, fixed income, money market, and other assets.
Monitor and track the performance of selected REITs, staying informed about news that may affect stock prices and dividends. Adapt your strategy and continue learning as you invest in REITs. Investment number 3, dividend-paying stocks. Dividends are a portion of a company's revenue that is distributed to its stockholders. Essentially, it's a way for companies to share their success with investors. The significance of dividends cannot be overstated. Dividends provide a reliable stream of income for investors. Unlike other investments that rely solely on capital appreciation, dividends offer consistent returns. It's like having a never-ending cake of rewards you can enjoy throughout your investment journey. Not only do dividends provide income, but they also offer stability. Investing in companies with a strong history of paying dividends will give you access to businesses that have stood the test. Here are 9 exceptional companies that have a rich tradition of paying dividends. 1. Coca-Cola. 2. Church & Dwight. 3. General Mills. 4. Colgate-Palmolive. 5. Stanley Black & Decker. 6. Consolidated Edison. 7. Eli Lilly. 8. ExxonMobil. And 9. York Water. These companies have consistently paid and increased dividends yearly, rewarding their shareholders generously. Trust in the power of dividends. Join the league of successful investors who have enjoyed the fruits of their investments while building a secure financial future now. Fourthly, Buffett recommends value investing. This approach involves identifying and acquiring shares of stock that are selling for less than they are worth. Warren Buffett's approach to finding undervalued stocks is relatively straightforward. He famously said, "Price is what you pay, value is what you get." In other words, he looks beyond the current market price of a stock and focuses on the company's underlying value. He seeks to identify companies with strong foundations and an edge over their rivals in their respective fields. Like a master sculptor, he chisels away at the superficial, seeking businesses with unyielding foundations fortified by unassailable moats.
Interest rates a day from now, or a year from now, or 5 years from now. So I say, can I function without knowing that? It's the same way as predicting what business is going to do or the stock market is going to do. I can't do any of those things. But that doesn't mean that I can't do well investing over time.
These moats exude an intangible power, a sustainable competitive advantage that shields companies from the onslaught of rivals. By doing so, he aims to capitalize on the market's tendency to overlook such opportunities, leading to potential long-term returns. Analyzing company fundamentals is a crucial step in value investing. This includes evaluating financial records, including the cash flow statement, balance sheet, and income statement. It helps investors understand a company's financial health, profitability, and growth prospects. Key factors to consider are revenue growth, profit margins, return on equity, and debt levels. Moreover, assessing a company's market position is essential. Understanding the competitive landscape and the company's relative advantage or edge over its competitors provides insights into its potential growth prospects. Factors like market share, the brand's strength, customer loyalty, and entry barriers help investors gauge a company's ability to sustain its competitive position. Furthermore, a key component of value investment is risk management. No investment strategy is free from risk, and the idea is to buy stocks that have a margin of safety. This provides a buffer against any unforeseen adverse events that may impact the stock price. On to investment number 5, bonds. Bonds are not just any investment, but powerful knights ready to defend and protect your capital during inflationary periods. Bonds let you experience the thrill of lending money, but with a twist that favors your financial well-being. By investing in bonds, you become a noble lender to governments, municipalities, and corporations. In return for your generosity, you receive fixed interest payments, like a coveted treasure, at regular intervals throughout the bond's lifespan. It's a reliable and enduring partnership that ensures your capital's safeguarding. With precise maturity dates, you can confidently plan your financial journey, knowing when that long-awaited principal repayment will grace your pockets.
The risk-free rate is used merely to equate one item to another. In other words, we're looking for whatever is the most attractive. But in terms of present valuing anything, we're going to use a number. And obviously, we can always buy the government bond, so that becomes the yardstick rate.
Unlike the wild roller coaster ride of stocks, bonds provide a calm and steady return on investment. Their contractual nature ensures that issuers can make interest payments and fulfill repayment obligations. Say goodbye to the anxiety-inducing price fluctuations and embrace the tranquil waters of bonds. You build a solid foundation designed to weather any storm by including them in your investment portfolio. And lastly, invest in Treasury inflation-protected securities. TIPS, or Treasury inflation-protected securities, are a type of bond issued by the U.S. Department of Treasury. They alter the primary value of investors' investments to protect them against inflation according to the Consumer Price Index (CPI) changes. In simple terms, TIPS offers a hedge against inflation, ensuring that the purchasing power of your investment does not erode over time. TIPS provides a robust shield against the ravages of inflation. As the principal value adjusts with the Consumer Price Index, the average price level of goods and services, your investment thrives and maintains its actual value, securing your purchasing power. For instance, suppose an investor purchases $10,000 worth of TIPS with an initial coupon rate of 2% and an inflation rate of 3%. At the end of the first year, if inflation is 3%, the principal value of the investment will increase to $10,300, original investment plus inflation adjustment. In the second year, if inflation remains at 3%, the principal value will increase to $10,609, $10,300 plus inflation adjustment. As a result, the coupon interest payment for the second year will be based on the increased principal value. This adjustment ensures that the investor's investment keeps pace with inflation. TIPS provides a serene stream of income through their semi-annual interest payments. You can breathe easy knowing your investment will keep rewarding you, regardless of inflationary storms. Additionally, safety is paramount, and TIPS doesn't disappoint. With the U.S. government's solid backing, you'll bask in the warm embrace of security. No need to worry about default risk when Uncle Sam fortifies your investment. Investing in TIPS can be as easy as buying shares of a TIPS mutual fund or an exchange-traded fund, ETF. These investment vehicles pool resources from multiple investors to build portfolios of TIPS, offering you a convenient way to gain exposure to inflation-protected bonds. To reduce risk on these 6 investments, you need to diversify your portfolio. Picture this. you're standing at a table filled with various delicious dishes. Would you limit yourself to just one delicacy? Of course not. You'd naturally want to try a little bit of everything. This is what Warren Buffett advises when investing. You ensure that one event or downturn cannot wipe out your entire portfolio by propelling your investments across various asset classes, businesses, and regions. Assume you have a portfolio made up of only one stock. If that stock performs poorly or the company faces a financial crisis, your entire investment would be at risk. However, if you diversify your portfolio by investing in multiple stocks for multiple industries, the impact of one underperforming stock can be offset by the others. By investing in what you understand, embracing the long game, seeking value, conducting thorough research, upholding unwavering ethics, and emulating Warren Buffett's unmatched investment strategy, you can navigate volatile markets, achieve substantial returns, and become a billionaire like him. The power lies within your hands. Press that subscribe button and watch the next video to unleash your potential and acquire new skills that will empower you to reach extraordinary heights in your personal and professional life.